Good evening, everyone. Good evening, and welcome to this week's market wrap. What an exciting week this has been. Nifty is up leaps and bounds beyond anyone's imagination, and there's so much to unwrap. But let's first off, let's take this off the list. And sir, what has happened? Why is Nifty so green after a long time? And what's the outlook from here on?
Yeah, hi, good evening, Vishu. Yes, while this was a truncated week, but very productive week from a market perspective, Nifty is up about 4.5%. Compared to that, the US markets are down, and most of the indices have ended in green. So, be it financials, be it defense, infra, gold has made a new high. And this is largely the comfort market is drawing from the fact that while big countries like, say, China is still engaged in a tariff war with US, but our sense is that with this 90-day window, we will be able to close the bilateral deals. So from that perspective, market is drawing a lot of comfort, and relatively or geopolitically, we are a lot more better placed to sort of conclude this deal. So from that perspective, I think Indian markets are taking it very well. Our sense is that in the coming few weeks, Nifty is headed towards 24,200 kind of a levels. Nifty has rallied about 10%. Bit overbought kind of a condition, so which is where some bit of a breather can't be ruled out. But when I look at big index or big component of the Nifty, which is Bank Nifty, 6 months decline has been taken out in 2 months. Nifty itself has done very well. So while the decline of nine sessions have been taken out in 6 months, so this is clearly highlighting a faster retracement. And we have been highlighting earlier also and we have been highlighting earlier also that going forward, whenever we see a decline of say 17 to 18% in the market, the next 12 months are quite productive for the market. So from that perspective, we have seen 20% plus kind of a rally in the subsequent next 12 months. So I think stage is all set for India to do well.
Absolutely. I think the inflation numbers have also come in slightly friendlier than we expected.
Oh yes, I think inflation for the past few months have been coming out really good. Now, in inflation, we look at the core inflation. So, core inflation is on a higher side at 4.1 odd percent, and this is largely to do with the fact that we all know that gold has been sort of making new highs, and so obviously that is contributing. But when you look at the overall inflation, food inflation is something which is sort of taking the overall inflation down. So inflation expectation was 3.6%. Last month also inflation was 3.6%. But this time in the month of March, the inflation has come down to about 3.3 odd percent. So obviously lower than the market expectation. And again, the biggest contributing factor was the food inflation. Mind you, food inflation was about 10, 11 odd percent in the month of October 2024, and subsequently it has been sort of coming down. And I think in the month of March, it has sort of come down to about 3 odd percent. So we've seen a structural decline or a good decline in the overall vegetable part of the inflation. And that is taking the overall inflation far more lower. And what it does is that it provides RBI the comfort to sort of go beyond 50 bips kind of a rate cut, which is where they've already changed their stance. So I think on top of it, I think the monsoon, we spoke about Skymet prediction earlier, and this time even IMD is predicting a pretty normal monsoon. So I think all this is leading to another or giving RBI a headroom of about 50 to 75 bips of a rate cut going forward.
Absolutely, sir. How are banks expected to react to this rate cut, sir?
Now, so when we look at banks, I think there are a lot of interesting things are happening in banks. So banks are already making new high. Now, last policy meetings, we have seen RBI cutting rates by 50 odd bips. Now, for banks, 60% of the loans are linked to external benchmark rates. So, which is where the yields sort of come down. And our sense is that the impact of that is about 10 odd bips. Now, to mitigate that impact of 10 bips, what the banks have started to do is that they've started cutting fixed deposit rates on select maturities. And now what we hear is that most of the tier one banks have cut the saving rate by 25 bips. And considering that the overall SA portion is about 24 to 28% of the entire deposit base, so that should sort of lead to an immediate benefit of 4 to 5 odd bips. So from that perspective, 10 bips is the overall impact because of the rate cut, and 5 bips is the overall benefit that will accrue because they've started cutting on the savings bank rate, which will accrue them immediately. And on top of it, they've also started cutting some of the select FD rates. So from that perspective, this is one of the ways to mitigate the pressure on margins. And I think markets have been liking this move by most of the banks. I think SBI has already lowered, or their saving rate is about 2.75 odd percent. So most of the big banks have already done it, and others are expected to sort of follow. But our sense is that clearly this is getting reflecting in the 52-week high levels of for most of the banks. So banks are or investors are definitely liking it.
Absolutely. Banks were on fire today. Speaking of banks, IndusInd also, I think, got some relief this week.
So again, see, IndusInd, there are a lot of moving parts. One is that we have seen the 12% kind of a rebound in the prices in the last 2 weeks. That is because the PwC final report came in, and their derivative losses pegged at somewhere about 1979 crores, which is about 2.27% of their overall net worth. So slightly lower than what the market was anticipating. But then again, there is a forensic audit mandated by Grant Thornton, so that is still sort of ongoing. And I think what the market is liking is that the management had earlier said that this is going to be a profitable quarter, largely expected to come from, say, contingent provision. The other aspect is that for a bank like IndusInd Bank, delivering 1% ROE is not a big challenge, and it is already trading at about 0.6 times. So if someone is willing to take a risk with further normalization of operations going forward in the next 2 3 years, I think there's a good chance that you will see this bank doing well when the management changes. So from that perspective, our sense is that overall some bit of a relief rally, given the overall uh, uh, price decline we have seen in IndusInd Bank, I think, which is why we are seeing some bit of a relief rally. And it could be big also if things fall in place.
Absolutely. Let's get to some of the results that were announced this week. Let's start with IREDA. How do we look at this?
So the way we look at IREDA is it's a long-term story on the renewable energy sector, and from that perspective, this NBFC continues to sort of deliver very well. Now, for the month of or for the quarter, March quarter, what they have done is that their AUM has grown at about 28 odd percent. NI growth has been pretty robust at 57 odd percent. And so some bit of a improvement in the NPAs have also we have seen. So this is one of the few NBFCs where we feel that the opportunity pie is very large. Plus, it can keep on delivering 24, 25% kind of a growth rate, or in fact, 28, 30% kind of a growth rate with a fairly steady ROAs of closer to 2 odd percent. And which is why we like this NBFC from a structural perspective. And it is part of our some of our portfolios which we recommend.
Absolutely. Moving on to IT, we had, of course, Wipro, and we also had Infosys this week. Let's start with Wipro, maybe.
So when we look at the IT numbers, Wipro last year the revenues had declined, and this time also the company is guiding for decline in revenues of about 2 odd percent. So from that perspective, nothing changes for Wipro. I think the only good part for the Wipro is that they have been the deal wins have been pretty good. But those deal wins are not getting converted into revenues because these are big deal wins and they take time to sort of get converted into revenues. Short-term deals is something they are still not bagging. So from that perspective, it's again a wait and watch and possibly one more year of watch kind of a situation for Wipro. And I think given the fact that this is a second year, revenues are going to decline for a company like Wipro, which is why within the tier one IT companies, we don't like Wipro. While they are saying that they are going to maintain margins plus their winning deals, But somewhere down the line, you need revenue growth, and which is what is the key missing link. Now, coming to other big boy, Infosys. The market was expecting a slightly better set of numbers. So, for example, for Infosys, again, the revenues were down about 3.5%, while the expectation was a slightly lower decline. Now, this is so FY25, this company has grown at about 4.2 odd percent. And I think the disappointing part for Infosys was that they are guiding for 0 to 3% kind of a growth rate in constant currency terms. So, which means that they are going to grow FY26 at a lower rate compared to FY25, and which is what is not being liked by street, despite the fact that they're saying that their broader margin guidance of 20 to 22% remains intact. But compared to TCS, I think TCS is clearly saying they're going to grow from, say, FY25 to FY26 growth rate is going to be better. This is unlike the same for Infosys, and which is where I think the challenge has been and which is why we have not really seen stock prices doing well. So clearly, the preference is towards a tier within tier one or to a player like, say, TCS. So from that perspective, Infosys and Wipro both have disappointed in terms of numbers.
Absolutely. And finally, let's also talk about HDFC AMC. How good were the results this time?
So largely, it's a play on the overall market, and we've seen that market sort of declining in this particular quarter. So which is why we've seen that their AUMs have also declined by 2.8 odd percent to 7.5 lakh crore. Now, overall market share have sort of come down to, say, from 11.6% to 11.5%. But the equity market share has sort of gone up to about 13.2 odd percent. SIP market share has been sort of maintained. And a reason why we like this is that, say, for example, markets have done very well. It's up about 10 odd percent. So the quite better, or things will keep getting better for a company like HDFC AMC and markets in general, which is why I prefer HDFC AMC.
Great. Well, that was it this time. Thank you so much for sharing your insights, Pankaj sir, and thank you so much everyone for watching. If you have any questions, please put them down in the comments and we'll try to get back. Thanks again once. All.
Thank you so much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.